Hey everyone, welcome back to Upside Down Data and to the next part of my unofficial series, but why the way that we currently think about fair value might not necessarily be the only or even best way. So by fair value, what I basically mean is kind of the typical price, the price that'll kind of act as a bit of a magnet where anytime price gets above it, then at some point in time it's going to come back and down and meet it. And whenever it goes below, it's going to come up sometime later and rise up to that price as well. And what a lot of people have used to look at kind of fair value for Bitcoin is this logarithmic regression line, what I'm showing you here in red. And it does a pretty good job of kind of acting as that fair value, like I talked about. You'll get these kind of bubbles above and below, but generally speaking, the price kind of tends to gravitate towards that overall trend. And so there's some volatility, but overall price tends to kind of follow that overall trend. And so this is an approach that's been made popular by different people. Different people kind of use this as what they call the fair value of Bitcoin. Now, I've come out before to say that there's probably more to the story than that, and I've put out videos in the past where we incorporate things like data from the stock market, things like data from the DXY, the dollar, and its relative strength, which in my opinion can sometimes give a more accurate understanding of maybe where Bitcoin's price should be at any given point in time. But this is, a reasonable approach. And so if we use this approach, currently you would be saying the fair value of Bitcoin is at 38K. But then of course that's going to be, changing with time and increasing as we go forward in time. But I want to talk about yet another way we might reconceptualize Bitcoin, taking advantage a little bit of some of the dynamics of Bitcoin. So if you're not familiar, although I think most of you probably are, Bitcoin has these events called the halvings, where the issuance of Bitcoin drops in half every roughly 4 years. So the first one happened back in 2012, then another one happened in 2016, another one happened in 2020, and we expect the next one to happen in 2024. And what people have noticed is that oftentimes when the halvings happen, that's when these big bull runs really kick off. So what I wanted to do is make a regression model that built that assumption in, this idea of 4-year cycles that are kind of in sync to some degree with the halvings of when they're happening. And how might that kind of model the price of Bitcoin or kind of give us a sense of a different way of looking at fair value? So let's go ahead and take a look at that model next. So that's what this model is here, the green line here. This is what I'm calling the 4-year cycle fair value. It's a regression-based model that, as I said, builds in that assumption that Bitcoin will go through these expansion and kind of consolidation periods that kind of take around 4 years each. And that is kind of what's going to be describing the price of Bitcoin. And just looking at, descriptively, it seems to do a pretty reasonable job, right? We kind of went up and then got to this first point here. We then kind of had this big expansion after the first halving right around here. As we go up, and then, price comes back down. We have the bear market. Price comes back up to it, and that then leads into this big bull run, come back down below it for the bear market, kind of come back, hang around it for a while for the next bull run, and now we're down back to the next kind of bear market right at this same time that we'd expect from prior cycles as well, kind of dropping down below, similarly to how we have done so in the past. Now, you might look at this and say, well, wait a minute, is this just another stock to flow model, right? Is this just another model that we should just laugh at because it's not going to work? Well, no. So this is not the stock to flow model. You may or may not be familiar with that model. That model is very different. That one is all about supply, and basically one of the problematic assumptions of that model is that supply is all that matters. But the bigger problem, in my opinion, with that model is it didn't account for diminishing returns every cycle. If you look at the stock to flow model, it assumes equal increase in price every single halving, basically, in a proportional sense. So on a log chart, basically, it expects there to be a same jump in price every single 4 years, which is, in my opinion, absurd. And you'll actually see that this model doesn't make that assumption. This model makes no assumptions about constant returns every cycle. And in fact, it actually, you can see, incorporates diminishing returns. You'll see that the expansion period is getting smaller in terms of on this log scale. The upwards moves are getting smaller and smaller and smaller every single time because it's adapting to the fact that Bitcoin has, historically speaking, had diminishing returns over its life. So this is not the stock to flow model. This is a very different model. The way it's calculated is totally different, and it doesn't build in some of those problematic assumptions that the stock to flow model did, which ultimately led to it failing to kind of continue to predict Bitcoin's price in a useful way. So that's just that kind of aside. So with this particular model, it's currently saying that the fair value of Bitcoin is 45K, but notably the difference here between this and the time-based model is that this is going to be constant for a while, right? We saw that here, it's going to last, if we look at previous ones, multiple years. That's probably going to stay down here at 45K before, going up for the next leg in that 4-year cycle. So that's kind of the model overall, and so I think it's a reasonable other way to look at it, right? Because one of the things that you lose in the logarithmic regression line is any sense of 4-year cycles, right? It's kind of that logarithmic regression approach takes no consideration into halvings and these kind of cycles that historically happen every 4 years. This is kind of building in this assumption that Bitcoin will continue to follow 4-year cycles. Now, obviously, that's an assumption. We don't know if that's true or if that's going to continue, but that is what this model has. And it does, I think, give some additional useful information that's lost from that logarithmic regression line. Now, the other thing that's really useful about this is that this model actually is very robust to overfitting, or it's unlikely to be to just fall apart if you fit it to earlier data. So the version I'm showing you right here is fit to all the data of Bitcoin, and so you could look at this and say, okay, well, it's just overfit. This isn't going to predict anything in the future. Well, if we do a little bit of an experiment where we go and we only fit the data to data up till 2017, the first of 2017, which is what I've done right here, then what we'll see is that the model actually predicts basically the same thing going forward, right? So this version of the model is only fit up to this data. It's barely changing the fit from here being only fit up to here versus the one that's fit to everything. And what that means is that this doesn't seem to be a particularly overfit model, because literally you could have made this model and fit it right here back in 2017, basically where as of where I'm recording right now, only half of Bitcoin's price action had happened at that point relative to what was to come, more or less. And you would have been fine. It would have actually predicted this expansion, this contraction, this expansion very well and gotten you to basically the same endpoint as fitting to all the data, now that we have the benefit of hindsight of what actually happened. So this would have been a very useful guide, basically, of telling you where Bitcoin's price was likely to go and when kind of the bear markets were likely to be and where the expansion was likely to continue again. This would have been very useful, even fit all the way back here. And just to give a comparison, if we had fit that logarithmic curve only up to this data, look at what it does. It works a lot less well, right? It's actually giving an overly pessimistic view of what Bitcoin's price would have done ever since that point. You can see that's pretty much only ever hitting Bitcoin's price at the lows. Not to say that this is a bottom or anything, but this relative low here, but then also the March 2020 crash and the bottom of the 2018 bear market. That's not really what a fair value model is supposed to be doing. It's supposed to be cutting a more, average path through the price. It's not supposed to be falling off like this. So this model falls apart if you fit it all the way back here. This model still does very well if you fit it all the way back here. So in some ways, this model might actually be more robust to that overfitting concern than this logarithmic curve approach. Something interesting I wanted to mention there. Now, the final thing I want to talk about is the useful thing about these types of models that are more kind of time-based is that we can do some future prediction. We can look forward in time and see what does it think, where does it predict Bitcoin's kind of typical price or fair value price to be X number of years in the future. So this being a 4-year cycle fair value model, I'm pushing it forward 4 years. So this is basically pushing forward 4 years from where we are now and just asking the question, where do we think Bitcoin's price might be 4 years from now as I record this in December of 2022. And so what we can see is that, it continues to go. And so it's actually saying that the next period of kind of expansion, relative expansion, like we've seen in the past that kicked off these big bull markets, will be sometime in 2024, which is not surprising because that's, the year in which we expect a halving to take place. So it expects there to be this expansion and then this kind of contraction likely leading into the next bear market sometime in 2025. It looks like leading into 2026 and maybe even 2027 potentially. And so if we just look at kind of the behavior of Bitcoin's price relative to this fair value line from this model, what you'll notice is that the tops of a cycle tend to happen kind of before the expansion period has ended, right? You can see this happening here with the peak here in 2013 happened before we kind of got to this contraction. Again, peak over here in 2017, almost, leading almost into 2018, happening before this kind of flattening out again. And then again here, both the peak in the spring of 21 and in the fall of 21 before we got to this flat line. So if that were to play out again, of course, that's a big if. This is all basically massive assumptions, so take it with a grain of salt. But if that were to play out again, what you might expect is that price kind of meanders down here, kind of eventually gets its way back up to around 45K, which is around where it is, here. Something like we saw here, something like we saw here, right around when that expansion period happens. That leads into a bull run that then pushes up above this line to some value up here. And then we come down, we meet it again, and we go then into our bear market as this flattens out, which then leads us down to this lower level. So if you look at the price level, which it kind of expects this kind of typical price to be, this price kind of that will fall below but then get back up to for the next run, that's all the way up at 106K. So if you're just inferring from that, you'd expect the cycle peak to be somewhere above that. Who knows how far, but let's say, 150, 200K, who knows what, somewhere above there, that then comes back, goes into the bear market, etc. So that's where it's expecting it to be. And what's also useful here is that because the logarithmic regression curve analysis is all time-based as well, we can also just pit them against each other to see what it thinks is likely there. And it actually would put the fair value of Bitcoin at that point at a more optimistic 150K thereabouts, 149K. 4 years from now. It's a slightly different perspective. Now, the thing I think is interesting when you compare these two directly against each other is that you can see that this 4-year cycle model is actually a little bit more pessimistic about Bitcoin's kind of price growth going from here than the logarithmic curve is. You notice that the logarithmic curve, when you look at it back here, you kind of get the green line dancing above, then below, then above, then below this red line, the logarithmic curve model. But you'll notice that kind of as we get out here, suddenly the green line isn't hopping above it anymore, which might suggest that it kind of thinks that Bitcoin's price is going to start to kind of have stronger diminishing returns than the logarithmic curve model thinks it will, which is notable, interesting. Obviously, we're going to have to wait 4 years to see if any of this is at all plays out, but that is an interesting perspective there. But, at the very least with this model, it suggests that if Bitcoin continues to follow this model, no guarantee it will, but if it does, then it means that current prices down at, 16, 17K are going to look like nothing in even the next bear market, probably. To say nothing of just kind of coming off the highs down to re-meeting the fair value line, we'll be up over 100K. And then, if that were to happen and we had some big run way up higher than that, people would probably see this as a horrible price for Bitcoin. But of course, anyone now would say that's an amazing price for Bitcoin to be. So that's kind of what I wanted to share, is that this is just another way of thinking about fair value, a different type of model we can construct that has some different assumptions built into it, that gives a slightly different perspective on Bitcoin and helps us kind of orient, hypotheses, kind of thoughts about where Bitcoin might be going in the future. Now, of course, the caveat with these models is that there's nothing to guarantee that they're going to continue to hold true. Bitcoin could just continue to fall and completely break off of these prior trends. We have no idea. But if that doesn't happen, right, if history is any guide, and if historical trends continue, if this time is not different, then this does give us at least thoughts about where we might look for Bitcoin to go and at what time scales, at what time horizons. And what this is really telling us is that if this were to play out again, we'd really be looking for 2024 at the earliest for the next bull run to really kick off. Doesn't mean price can't move up. We'd actually expect price to be back up to around 45K to kick off that big run. So that's still a notable upside from here, but it's not, the run to all-time high, even in the next year from here. So we might have still a lot of time down here chopping, maybe slowly moving back up to that level before moving back up. So obviously none of this is financial advice. You should make your own opinions of where you think Bitcoin's going, what's going to happen, but just an interesting perspective that I wanted to share. All right, if you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter. A lot of updates, better indicators, and more over there.